Hi everyone, my name is Rashid. Today is the 26th of February 2023 and I'm going to be going over my weekly prediction for SPX. As usual, we'll be going over the monthly charts, then the weekly charts, and finally the daily charts, and I'll give my final prediction at the end of the video. Now, I would like to make a strong disclaimer before heading into this video, since all content in this video is completely for educational purposes, and it is highly advisable to consult a financial advisor before taking any trades based on the content presented in the video, since markets are subject to risk and taking any rash trades could cause losses, and therefore it's unadvisable to go this route. Now, let's head into the video. From the monthly charts, we can see that there has been a particularly sideways trend for the past few months and not a clear directional breakout in any direction. Rather, the market has been at a pretty significant standstill. But as you can see, the current month's candle is forming a bit higher than the last month. And although we can't really make a clear discern from this one, we can still take a strong support and resistance zone, namely the open high low close. We can take the high as a long resistance point at 41995.44, the low at 3943.08 as a long resistance point. Now, the RSI is also confirming the fact that this market is slightly sideways, since as you can see for the past few months it's been in this M pattern, showing that there's not really been a significant upward or downward sentiment, rather an oscillation of equilibrium of the sorts. And until and unless there has been a strong breakout candle on either side, for the monthly trades it's unadvisable to go this route. Now let's go on the weekly charts. Here's where things get a little bit more interesting, since as you can see I have drawn a strong trend line from the weekly charts, which is been going for the past few weeks and can be extended if not broken. As you can see, the RSI has been steadily going downwards for the past few weeks, and because of my last week's prediction altering to going down, which was correct by the way, as you can see after two indecisive candles there's been a strong red candle, which we can take as a good indication of bearish sentiment. Now, here we can also take another support zone from the weekly chart as the low of this candle at 3943.08. This is the current low of the weekly candle, and we can take this as a good support point for the next week, since the market closed relatively close to its low, meaning that there is a possibility that the market can hit the support point. And this is all that we can decipher from the weekly charts. Finally, if we head on to the daily charts, here's where things get a little bit more interesting, because as you can see here, there is a longer trend line that I have drawn here, which can be extended for the past few weeks, and when extended doesn't really make sense now, but if the market does reverse upwards, this trend line becomes significantly more important and will be enforced when the market gets closer. As you can see, the support zone that I mentioned from the weekly charts is also visible in the daily charts and shows the clear correlation between the two. But from last week, I drew an M pattern here, which I mentioned that this was the cradle, and once broken, the market would go down, as you can see here. But for the past 3 days, the candles have been really just spinning tops, which are a sign of indecision. So there's not really a clear directional view as to where the market is going to be heading. But however, the RSI has been heading down with the market, confirming the current price action. However, it doesn't give too many hints as to where the market might be heading. However, Bollinger Bands provide a very, very interesting clue in the market, since as you can see here, this candle has reached the bottom of the Bollinger Band, and from experience, it is very, very likely, and what happens quite often is that when the market hits the top or the bottom band of the Bollinger Bands, it often reverses to the middle. So we can take this as a light bullish indication, as it is very likely that the market reverses to the moving average in the middle. So this is all we can decipher from the daily charts. And now that we've covered all the technical aspects of this video, let's now get into the option chain analysis, and let's switch over to the document with all the options prices here. So as you can see, for the monthly expiry, the high CE and PE are both at 4,000 with a minus 100 change in the CE and a minus 100 in the PE, which has been a long time coming, since for the last few weeks the highest CE and highest PE have been stuck at 4,100, and now finally the CE and PE have both reduced down to 4,000, still giving an ambiguous signal, since both the CE and PE is less, giving a bullish and bearish signal respectively, so we can discount this altogether. The premium of 4000 CE is 59.40, and the premium for 4000 PE is 84.90, with the PCR at 1.50. Next, for the weekly expiry, we can see that the highest CE is 4000 and the highest PE is also 4000, with a minus 125 change in CE and a minus 50 change in PE, which again gives an ambiguous signal since both of them are less and therefore doesn't provide a clear directional view from the option chain. The 4000 premium for the CE is 22.71 and the premium for 4000 PE is 52.30, with the put to call ratio at 2.21. Finally, for the daily expiry, we can see that the highest CE is 4000 and the highest PE is 3950, with a minus 100 change in the CE and the minus 125 change in the PE. Now, it still gives an ambiguous signal since both the PE and CE are less, and you can see this is a recurring trend across the monthly, weekly, and daily option chains. For the 4000 CE, the premium is 5.90. For the 3950 PE, the premium is 10.10, with the put to call ratio at 2.83. Now that we've covered the option chain and the technical analysis, I think it is safe to say to wait for the no trade zone to be broken. What no trade zone am I talking about here? The no trade zone that I'm referring to is 3940 and 4002. And until and unless the market breaks one of these two, it is highly unadvisable to take a trade. Since as we can see with the option chain, there is no clear signal as to where the buyers or sellers are holding their positions. But we can see that because the Bollinger Band has hit the bottom of the price action, it is highly likely that there might be a bullish reversal. But until the resistance zone is broken, it is unadvisable to take a trade. And on this note, I would like to end the video, and I'll catch you in the next video where I'll go over my review for this prediction 13, and make a new prediction next week. But I'll see you later.